There we go. Hey, welcome to the Mortgage Minute and welcome to the spring market. Here we are. First of all, the rate trap. This is an interesting article from the Weekend Globe and Mail talking about the fact that central banks across the world are looking to normalize rates. We've talked about this in the past. What's the definition of normalize? And really that means to start creeping interest rates up. But as the economies succeed, as the economies are doing well, then they can't. They have to actually keep rates lower because it all comes down to how you maintain the 2% inflation target. The other thing that's interesting, when you look at the long-term fixed rates, okay, remember, Bank of Canada will govern what happens with your floating variable rates. But when it comes to fixed rates, follow the bond yields. And here's an article saying, watch for more deals to come. If you want to get the good deals, follow the bond yields. Well, what do they mean by that? Well, the 5-year fixed rates are priced off bond yields. So if you look today, now this is going to be hard for you to see, but here's a chart I tried to grab here showing the downward decline. And look at the, where are we? Look at this downward slope here. If you see that, how the bond yields, since December, the bond yields have basically just dropped right off. In fact, looking at this, as of Friday, March 25th, the bond yield was 1.44%. So take a bond yield, add 1.7, that's where your 5-year fixed rate should be. So looking at that, we should be looking at 3.14%. If your 5-year fixed rate mortgage you're currently in is not 3.14, if it's higher than that, that means there's room to come down on your 5-year fixed rate money. So what's the message? Don't lock in. We already saw that the Bank of Canada is not going to make any change in the prime. Prime's not going up. Discounts are growing on prime. Fixed rates aren't going up, so don't lock in your fixed rate mortgages. Give it time. There are more deals to be had. In the meantime, Ottawa to give home buyers a boost with subsidies. Well, this is the big news from last week, was the budget out of Ottawa. And I want to touch on a few things because there's a lot of confusion over this new first-time home buyers incentive, or as they call it, an incentive. I would argue, not really. So first of all, what is it? A household with maximum of $120,000 gets a new initiative. CMHC will provide 5% of your down payment for the purchase of existing homes. If it's a brand new home, you can get up to 10%. Your income must be less than $120,000. Oh, by the way, the government's going to come up with some way to share on the upside. So if your home value increases, they get a piece of that. That's interesting, isn't it? They'll also apparently share on the downside. All these details have not really come out yet. There's still a lot of question marks. In fact, the program is not slated to start until September. Now, here's one of the most important things is that the maximum mortgage can only be 4 times your income. So if you have a household, this is interesting, a household with $100,000 of income. So let's say, forget about the first time incentive. If a household has $100,000 of income and they put 5% down, they would qualify for a $479,000 purchase, or the CMHC insured mortgage would be let's just round off, $475,000. But since the new program can only have a maximum of 4 times your income, that $475,000 comes down to $400,000. So this is actually making, if you utilize the program, you're actually going to qualify for a lower amount. So yeah, they've given a bit of a free loan in there, but I don't know. In places like Vancouver and Toronto, there's not a lot of people with 6-figure income that are going to be wanting to buy something for as little as $400,000. So stay tuned for that. In the meantime, they did introduce the ability to increase the amount you can borrow on your RSP loans. That was actually not a bad thing. That's gone from $25,000 to $35,000, and a couple can both participate, so go up to $70,000 borrowing from your RSPs. So speaking of RSPs, last week I did talk about Centurion and the fact that it's going to be available in March. Good news, Centurion has kept their program open. It is still open for the month of April. So if you're looking to have a non-correlating asset, if you're not happy with the returns you got in your RSP and your stocks and bonds and mutual funds from 2018, Centurion did produce over 20% return last year. So when everything else is going down, here's a company that did really well, focusing on student housing in southwestern Ontario as their main component of their apartment REIT. It's a real estate investment trust. It's RSP eligible, minimum $25,000 for the investment. It is open and available for the month of April. If you'd like more information, give me a call. Ladies and gentlemen, that's the Mortgage Minute for this week. Hope you have a great week. Bye.